Hello, everyone. This is Andrew Berman from NMP, and you are watching the Mortgage Leadership Outlook coming to you live on this beautiful Wednesday. Here we are, actually almost wrapping up the first month of the year. Pretty excited about today. So this is someone actually who I've wanted to have on the show for a long time, ever since I happened to have caught the podcast that our guest did with Kevin Rose. It's really just an eye-opening thing where we've talked a lot about how blockchain is going to impact our industry, and we know actually there's so many areas of improvement. So I was able to actually reach out to Carl Jacob, who is the guest on Kevin Rose's podcast, and if anyone wants the link, I'll drop it actually in here later on. But got into a little bit about Carl's history. So Carl is actually he's right now on the phone. Unfortunately, he was not able to join us live. Carl, say hello to everyone out there.
Hello, everybody.
Very cool. So Carl Carl Jacob is the CEO and co-founder over at LoanSnap. Carl, if I remember correctly, you've got a big tech background, right?
That's correct. I've been doing this for quite a while. Got 7 companies that have built, raised money for, done about 22 rounds of financing, and fortunately for me and my investors, have been able to not only return their money but make a good profit for them.
So, Carl, can I ask you, what about the mortgage industry? We hear you're successful in tech, but what about the mortgage industry excited you to get involved?
I think there were really 2 things. One was really seeing how consumers were being treated in the mortgage process and wanting to fix that. It was basically 2 things, really: the speed and the customer relationship. It just seemed like the focus was on getting a mortgage done and then kind of moving on versus building a relationship with the customer over time, and focusing on what consumers are really interested in, which is improving their finances. The second was really this idea that it's a really large industry where there's been very little innovation, if any at all. Mm-hmm. And I think part of the great thing about mortgages is there's a lot of money in the industry. It is the product, so to speak, that backs banks and governments and large corporations and helps them preserve and grow their wealth. And yet it's very archaic, mostly run very similarly to the assembly line that Henry Ford invented way back when.
Interesting. Well, listen, our industry it's reactive. We basically need a mortgage crisis or a health crisis to have innovation. Without some kind of crisis, we kind of just are good with doing what worked for us previously. So where do you see the big shift and big opportunities to have an impact on the industry?
I think there's really 2. I think the first is focusing on the customer's needs versus, I think, external needs, whether it's the company or investors or whatever it might be. And by investors, I mean people who buy the mortgages. Yeah. Because that's driven a lot of the restrictions in the industry, like the 30-year mortgage. I think the other one is really revamping the process from the ground up, which is what we set out to do about 5 years ago, and more recently closed a loan in 24 hours to kind of a proof point, hey, this actually doesn't have to be the cumbersome, archaic process that it is today. And it actually can be relatively convenient and a positive experience for the customer. And we think that's the goal. The goal is to speed things up and make them simpler and more understandable for the customer, which results in 2 things. One, them saving money and the possibility for others to make more money because you've squeezed out a lot of the cost in the system, and force the system to be efficient, which of course saves money both for the customer and for the people involved.
So now you mentioned 24-hour loan close, which is amazing. I mean, we're talking about an industry that if you hit 15 days, we're celebrating. But so Carl, I mean, the data to make a decision is already out there. We know actually how much money our borrowers earn. We know actually how much money is sitting in the bank. We know the collateral, how much the house is valued at. So like, what will it take to actually to get to where instantaneous transactions, so where like it's just basically we gather the data where it is right now and we make the decision. We know actually a lender's lending criteria. So what will it take to actually to get closer to like an instant underwriting decision?
Well, we're not far, that's for sure. I mean, 24 hours is, as you mentioned, pretty close
Phenomenal
to that goal. I think the key is focusing on what we do, which is focusing on the data that's already out there, and you can get access to that data with the permission of the customer, versus having the customer upload documents and forms and filling things out. That I think is gone by the wayside, and that's happened in the car loan industry and the solar industry and a bunch of others, where the recognition really is the data exists in a database somewhere. It's our job to go get it with the customer's permission, aggregate it, and then use it as a way to make these transactions simple and painless. One interesting point, though, is that, as you know, there's a 7-day waiting period. So in some ways, the regulatory environment has to change in some ways to reflect the fact that technology has moved.
So, and just to like that 24-hour, is that like one time, like perfect scenario? Is it something that's replicatable?
It is. The AI system is the one who really figured this all out. The way our system is built, that there's a massive tasks that need to be done, and then the AI artificial intelligence sits on top of that and optimizes to create the best outcome for the customer, which is to save them money and ensure that it gets done quickly. And so, we've actually done it in 48 hours. We've done it in 72 hours. We've done others in under 24 hours. So it's very, very definitely something that can be replicated. And, we're working more and more toward making that the common case versus the edge case.
Well, that's fantastic. It's truly just phenomenal. I mean, it's and it's amazing to see actually that the celebrations people have actually when we close in 15 days, and it is a significant improvement. But yeah, 24 days. That's just exciting. So you see actually what you're doing actually with LoanSnap, and then actually you look at blockchain. Tell us about the opportunity that you saw in blockchain as you started to re-engineer the mortgage process.
Yeah, I think it's a recognition that the entire back-end process to purchasing a mortgage is part of the reason that it's so slow, right? You have a lot of investors who have not changed in years, with very set ways of buying mortgages and very strict requirements, which I understand because they're balance sheeting billions of dollars of these things, and the government's balance sheet's about $3 trillion worth of mortgages. And when you're doing it at that scale and size, of course you're going to move slowly. Alternatively, I think that the blockchain in particular has exposed a great opportunity, which is the idea that really anyone could participate in this mortgage marketplace. Yeah. And today, effectively, the way you would do it, there's a couple different ways, but let's say the most simple way is you put your money in a bank, in a savings account, and that bank would go turn around and lend that money out for a mortgage, and they would collect about 2.9%, and they would give 0.1% of that to the customer. Yeah. Our belief is that there's a lot of inefficiencies in that 2.9%, and that if we could provide a direct route for really anyone with a crypto wallet, the ability to invest in the same type of product that Fannie and Freddie and others purchase and use to power their balance sheet, so to speak, or keep their money safe and help it grow over time, that would be something that the blockchain and people outside the blockchain would desire. It's basically this idea that anyone in the world can get the kind of return against a collateralized loan that large institutions and wealthy people get. And that's really the kind of the sign of the blockchain. The blockchain, the goal here is to provide access to people who just never had access to the products because they either didn't have the money or the influence to get to them.
Yeah. So if you're not an accredited investor, you're not actually able to directly invest in pools of mortgages. But now with basically the Bacon protocol is kind of like the center point of this, right?
Yeah, exactly. Bacon is the protocol that we built, and it's backed by liens on homes. And so the base case here is that you are buying a coin that, rather than being backed by dollars, is backed by liens on homes, which is, as you know, primarily the vehicle that a lot of the balance sheets in corporations and governments are set up. And so before, not only you had to be accredited, but you had to have a team of people to buy and sell those mortgages and manage them. That's just not something your average consumer is going to be able to do anytime soon.
So, I mean, what's the process? So, let's say I actually want to invest in real estate, and I'm not an accredited investor, so I can't actually go and directly invest in mortgage-backed securities. I don't have a team of people actually that do trade stuff for me. So, what is the process if I want to invest in real estate using the Bacon protocol?
Yeah, it's super easy. You basically get a DeFi wallet, MetaMask, and there's a bunch of others, and you put some money in. USDC is kind of the more common way that people translate dollars from the outside world, so to speak, into the DeFi world. And then you come to the Bacon website and you trade that USDC for what we call BHOME. And BHOME is the token. It's a Bacon protocol-based token that is written to, or the specifications for that token are the same specifications that Fannie Mae and Freddie use to specify loans that are sold to them. So we decided our first version of this would be what I would call straight up the middle, right? The very well-known product. The government has about $3 trillion of these types of loans on their balance sheet with these specifications. So you're not doing anything crazy, and you're not getting into hard money loans or non-QM. These are the ones that tomorrow, if we took that pool, that they would qualify for being purchased by Fannie or Freddie or anybody else who buys loans based on those specifications. Yeah, and it's a huge benefit. So you get two things. The other is just that's all you do. The other is one of the things that we saw when we came to the blockchain. What that was concerning is this idea of like rewards. You kind of put money in and you get put $1 in, you get $1 back out. Well, that's a given. Okay. And then you get rewards on top of that. And they were kind of separate systems. The idea was basically if you put money into a stable coin, then you would get some rewards on the side, kind of like what you get out of a savings account. The problem is you have to claim it. You get charged if you access the money, and there's all kinds of wackiness. So what we decided to do is create what we call a stable plus coin. So the coin is stable, like the money, like dollar for dollar stable against liens on homes. But as people make their mortgage payments, that money flows back up into the coin. So the coin increases in price relatively slowly compared to some other blockchain products. Yeah. But also safely, right? Because you're going from $1 to $1 to I think it's $1.02 or something like that right now. And you don't have to do anything. The value of your money just goes up, just like the money you put in a savings account. Just one day you look at your account and it's more money than you had there before. Same way with BHOME. You look at your account and it's worth more than it was when you put the money in.
Wow, that's phenomenal. So, and this is happening today. You're saying actually, like individual Main Street investors can go out there right now and buy Bacon coin or B money
and BHOME, yeah. And so, we have about $31 million in home value that we've lent against, and about $5.2 million worth of money that has been lent to homeowners. Yeah. So that, you can do the math on the loan to value on that. It's pretty decent. And that has been, we started that in September, and it has just grown from there quite quickly, and it accelerated quite a bit as people, I think, especially now when you've got a downturn in the blockchain market and the crypto markets, that's when people start thinking, gosh, should I really be betting on these coins that go up and down 20 or 30% based on kind of these technologies versus a coin that's backed by collateralized loans, which is considered by many people to be a safer and really not non-correlated asset class. I mean, liens on homes versus cryptocurrencies like Dogecoin, boy, it's hard to imagine less of a correlation between two assets.
Yeah, 100%. So what happens when one of these loans, and we have 2 minutes left. I just want to keep mindful of that. Carl, I appreciate you taking the time, but unfortunately, Carl's got to bounce. But tell us, what happens when a foreclosure happens in one of actually these pools?
Yeah, so that's the great thing. It's nothing different than it does today. So basically, we service the loan, we'd foreclose on it. There's some interesting ways that we can improve that because we have better data than others and hopefully keep them from going to foreclosure. But foreclose on the house, sell the house, and then return the cash to the pool. And given the loan to values, of course, that puts the pool in a very good position. And then the DAO, or what is the distributed organization that manages all this stuff, would make a determination where that money would go for the next set of loans. And that's one of the interesting things here is the decision, like it is in a mortgage company, isn't made by us. It's actually made by the investors in those mortgages as to what they'll buy and what they won't buy.
Okay, that's phenomenal. So, all right, last question in our last 60 seconds here. So, currently you have a team of basically you're regulated. You got a team of regulated licensed originators. You kind of actually, I think you look at it actually as the necessary connection to the real world. But do you see actually an idea that at somewhere down the road originators will be replaced in the future?
We hope not. We'd love to have more originators on the platform and selling loans to the Bacon Protocol, or in this case, BHome and maybe others. And I think there's always going to be room for that human connection.
Yeah.
I think,
100%.
However, we're going to automate a lot of the stuff that nobody likes to do. I mean, we don't need originators or really underwriters to check two numbers in two boxes. Hopefully we can get machines to do that kind of stuff. Yeah. But we do need people to talk to customers about their financial situation and how it can improve. Or, the tougher situations when you get an appraisal on a house and it comes back lower than you thought it would be. And that's kind of a human connection where you need to have that conversation and walk through, a little bit of the heartbreak and be a human on the other side and compassionate about the situation that person's in.
Oh, it's fantastic. Listen, so Carl, did you say actually that you want originators to sell you loans? Is this a wholesale or correspondent model?
Yeah. Well, somewhat wholesale, although this looks a little bit different than what you might see in other places. But yeah, we're open for business for other originators. We originated many of the loans that are in the pool today, but we'd love to have others join. So that's a great way to participate. Bacon awesome. Can be a great takeout partner, and I would argue much faster and in some cases more flexible than other investors in mortgages.
All right. Beautiful, Carl. Thank you so much for joining us. I really, really appreciate it. It's great actually to kind of plug into your world. And everyone, I'm going to drop actually the link so you can listen to the Kevin Rose podcast. I thought it was a great interview. So, Carl, you have an awesome day.
Great. Thank you very much. Appreciate the time.
All right, everyone. Thank you so much for joining us for another Mortgage Leadership Outlook, where we meet with the greatest minds in our industry. Really, just a pleasure. Just kind of like it is something I heard this podcast, and I thought it was just absolutely phenomenal. So I'm just going to share the link in there. This kind of goes into a little bit of a deeper dive. Unfortunately, we didn't have enough time actually with Carl to answer all my questions. Katie Jensen, our staff writer, who comes up with some amazing questions. She gave us some questions that he just didn't get a chance to. But I appreciate you joining us here on this Wednesday, and we will see you next week for Mortgage Leadership Outlook. Everyone, have a great day.